Hey everybody, we're going over the big, beautiful bill this passed through Congress, the new tax bill that Senate, the House, and now Trump has signed into action. We're over what the important things are, what you should know after this is passed, what things are changing, and what things are staying the same. So we're going to jump right into it. I'm going to keep this pretty short, about 5, 6 minute video, walking through exactly what's going on here. So first and foremost, a couple things that kind of mentioned. Right now, we still have marginal tax brackets. And right now, they're going to all stay the same. Right now, we have the 10, the 12, the 22, 24, 32, 35, and 37% tax brackets. Those were made permanent. Now, what does permanent actually mean? It means until someone else passes a new tax law and changes stuff in Congress again. So it's as permanent as permanent can get, but it can change in the future. So how long that lasts, no one really knows that. Hopefully, it lasts a little while, but we could see it with the next president gets elected. That could change and go up or go down. Most likely, it would go up though from where it is today. Now, they are still marginal brackets. That's important to know. If you are retired or even still working today, these marginal brackets and how they work, right? They're not effective, right? So the effective tax rate is all these marginals combined compared to what you make. For example, if you make $100,000 and you're single, you're in the 22% tax bracket. That doesn't mean all your money gets taxed at 22%. All right, your effective tax rate is going to be much lower because some of your dollars get taxed in the 10 and the 12. All right, so that's not a full tax rate that you are paying. Now, the other thing that's changing, and it's kind of a big deal here, is the standard deduction. So the standard deduction right now is going to be increased. Now, if you're a single person, it's going to be 15,750, and if you're married, it's 31,500. Okay, now these were made permanent. Okay, again, we'll see how permanent that will be. But the one major thing that changed for anyone who is older than the age of 65, you're actually going to receive an additional standard deduction. An extra $6,000 will be added right to it starting in the year 2025. That's only going to last though until 2028. This is kind of their compromise for no taxes on Social Security. That basically they're going to give you a larger deduction if you're over the age of 65, which will help reduce, right, your taxes in retirement. So that only lasts for 3 years, 4 years, 2028. So keep that in mind. But that presents a really big opportunity, right, for a lot of people who might need some tax strategies throughout their retirement. Now, there is a phase out, though. So the $6,000, not everyone's going to get it. Essentially, if you make over $75,000 as a single filer, all right, it's reduced by 6% by which amount goes over $75,000. So, for example, here, if you make $100,000 and you file single, $25,000, right? 6% of 25,000, that is what's going to be reduced by that deduction of $6,000. All right, a little confusing, I know, but really listen to that if you have to. And if you're married filing jointly, the amount is $150,000. So if you go over those limits, you're going to lose part of that standard deduction. Okay, so again, keep that in mind. Again, a big tax plan on a year that you have to kind of keep in mind. Where if that increases over those amounts, you might want to do Roth conversions maybe up to those amounts now. You might not want to go over, right? There's some things to kind of keep in mind there in terms of the standard deduction and what happens here going forward. Now, the other thing kind of happening there too, we have this car loan interest deduction. There's a phase out here as well. Over 100 grand if you're single, over 200 if you're married filing jointly. But there's a 10,000 deduction for car loan interest. There are phase outs, and the final assembly of the car has to be in the U.S. All right, so that's another kind of interesting thing that's kind of happening there. So keep that in mind as I go through this. Other thing going on, I know it's a whole lot, but I keep shouting these things out. Give you all the information I can. We got charitable giving. So there is like an adjustment to the amount of AGI, just gross income you could have now. It's a 0.5% floor for charitable giving. So basically, if you don't itemize, there's a way to maybe save more on the charitable side. With your charity if you do get there. Also, too, there's the estate tax exemption. It's being raised from 13.99 million to 15 million in 2026. So if you have an estate worth more than that, you get taxed at 40%. That's actually being increased. So if you're below that $15 million mark in 26, you will not pay any estate taxes in your estate. So that's increasing, which is a good thing. That was set to reduce back down to around 5 million. So it's nice they kind of did increase that there. Um, there are a couple of things. Salt tax. So the salt cap was changed. It's now going to be $40,000. And that's going to go all the way to 2029. Then in 2030, it reverts back to the $10,000 amount that it currently is today. So again, that salt cap is a big deal for a lot of people who have bigger properties. They pay a lot of taxes and insurance and all this stuff on the property. You now might be able to write off more of that on your tax bill. So up to $40,000 now, and it'll increase by 1% a year for the next 4 years as well. So a couple of cool things that are happening here. Another big one that was kind of talked about a lot: the no tax on tips. So if you do make tips today, up to $25,000, you do not get taxed on. Okay, so there's a limit that again only lasts at 2028. So yeah, 25, 26, 27, and 28, where that's going to be there. It is reduced. There's a phase out. There is reduced by every $100 for every $1,000 of your income that exceeds $150,000 if you're single, or $300,000 if you're married filing jointly. So, pretty big phase out there if you're married, but essentially 25 grand is the limit that you get for no taxes on tips. For overtime, it's 12,500 is a deduction with the same income phase outs. So interesting there. We'll see how that plays out. But essentially, there is going to be a reduction in taxes there. It is not as large as people wanted on that end, but there's still going to be a tax reduction with all this stuff there. And there's probably even more stuff too that we're not covering here. But I want to keep this video a little bit on the shorter side if I can. I know it's 5 to 6 minutes. Here we are at 7 minutes, still going. But there's a lot of interesting stuff happening with this bill. If you want more updates, follow our channel here. We'll have some more stuff coming out. Definitely some unique planning opportunities. So those who are, especially like in retirement, getting close to retirement, some interesting stuff that you can be doing, whether it's with Roth conversions, whether it's making sure that you're getting these deductions, so keeping your income below certain thresholds to get these deductions that are being offered now. A lot of just stuff that we are seeing. So definitely like this video if you like the information here. Subscribe to our channel, and we will see you next time.